Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 2nd of May 2019, so welcome everyone. Welcome to this Thursday's morning session where we're going to have a look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, well, let's quickly jump into the charts. Now, the first one I want to touch on here is the FTSE100. I talked about this one yesterday in my Traders Espresso as well in the morning. So basically what I was saying, guys, to keep an eye on this little key area of support near the 7,410, and you can see that we had a nice drop here below that. It sold off, the index sold off and traveled lower. Now it almost hit this other key support area that we're keeping a close eye on, and that's around the 7,370 level. It just fell shy of a few points from hitting that. Also, just near that level, we do have this upside support line that has been running here from the lows of December. So also keep your eyes on this one. So in a way, in other words, if we see a further slide lower, of course, like I said, aim for this 7,370, but slightly below, like I said, we do have this upside support line that could also come into play. We could even see maybe a false breakout here, but the only thing is that wait for and see how the daily candle is going to close here. If you're trading intraday, I mean, then wait for a 4-hour candle at least, and then if we see a strong 4-hour candle closing below this, certainly this increases the chances for a further move lower here, potentially aiming for the 7,290 level, or even this 200 EMA here on the 4-hour chart. But if the day is still going to close above this upside support line, then well, I mean, that could mean that the bears are still not ready to kind of take control of this index, and we could see another push higher. But that's in the scenario if we see a break here, we see maybe a false breakout initially, but in any case, a break. But if this continues to hold, if we don't see that break, and if it continues to hold, certainly it could, of course, retrace back up here again. The only thing is that for us now, we're going to take a more cautious approach here with the upside. We'd probably wait until we see a push initially above this downside resistance line. And just to kind of mention what that line was here, this has been running here from the highs of May last year. So, excuse me. Excuse me. Basically we would need to see a nice good push above that downside resistance line, and for better confirmation, a push above the 7,450 level, back above this level. Yep, this is when it could become a little bit more exciting for the bulls again. We could target the 7,478 zone again, or even actually going all the way here towards these recent highs, or should I say last week's highs, near the 7,530 level. So for now, of course, the game plan is to continue observing this upside support line and this 7,370 level, and see how the index performs around there. Gold sold off yesterday, so gold sold off. We did get the FOMC statement, and of course, as it was expected, the rates remained the same. So gold had a negative reaction here and traveled lower. It continues to travel lower, continues to push lower. Now we're still keeping a close eye on this upside support line, this medium-term upside support line taken from the lows of August last year. Now again, the same idea kind of remains here. We need to see if this upside support line holds or not, because if it does do the trick one more time, then we may see a rebound and a push back up again. But for now, it is going to be a little bit of a tricky one, so that's why I just wanted to kind of point it out, show you where gold is right now, because at the moment we're going to be quite neutral in this one. But if we see a rebound here and a push, let's say a push above the 1278 zone, approximately there, this is of course could increase the chances for gold kind of to push higher again. The only thing is that probably for those who are more on the cautious side, the 1288 zone, that's what we're going to be looking for, because if we do see a nice good push above the 1288 zone here, this could also place the commodity above its 200 EMA here on the 4-hour chart. So this is when it could be seen as a nice good positive thing here for gold, and that's why for those, like I said, who are more on the cautious side, you could in a way wait until we see a push above the 1288. And even then, also just to kind of point out that even then we should remain somewhat a little bit more cautious, because we still have this downside resistance line, and basically we would need to see a nice good pop above it before we could consider higher areas above the psychological 1300. For now, the upside seems to be off the table, but again, that's of course from the short-term perspective, because for now we're going to continue observing this upside support line and see how it's going to perform there. For us to get bearish on this one, we would need to see not only a break of this upside support line, but also a drop below the 1266 level. So yep, only then we will consider going like lower, even lower. So for now, guys, continue observing this one. It's going to be a very interesting moment here if we see a touch of this upside support line, because then we'll take it from there and see what it wants to do further. Bitcoin is pushing higher now, unlike Ethereum or Ripple. Ripple, by the way, is kind of probably the least performing one, but Bitcoin here, and I'm looking at the Bitfinex exchange here, basically it managed to push back up here towards the April highs. Now this is where it's going to be very interesting to watch. If we see these April highs getting cleared, then it's going to be great for the bulls. This could be seen as a nice bullish sign, and by April highs I mean around the 5,695 zone. So in a way you could round it up towards the 5,700. So a nice good push above the 5,700 could lead the crypto a little bit higher here. Now I do have only like another level here, just slightly above it by 50 points here, and that's 5,750 level, which is a very good area of resistance as well. As you can see here, back on in around the 18th of November, it acted as this very strong area of resistance from which the crypto sold off heavily. So that's why for us, the first area to watch is of course the 5,700, but the more important one is the 5,750 here, marked by the highs of the 18th of November last year. If we get a nice push above that, then yep, further acceleration to the upside could be possible. We could be aiming towards the psychological 6,000 level, or even actually above that. And above that, we do have some better ones here, around the 6,200 zone, 220, something like that, approximately there. So keep your eyes on those. But for now, it is where it is. It might also retrace a little bit back down. The only thing is for us to, let's say, consider slightly lower areas, at least in the short run. Ideally, let me just get rid of this line here, guys. Ideally, we would like to see, of course, a drop below this little low here, near the 5,365 zone, approximately there, or 70 even, you can round it up. So in a way, if we see a drop below the 5,370, we could then target the 5,220 zone, approximately there. And probably by the time, let's say, if it would travel here lower, we'd probably have the 200 EMA almost coinciding here with the 5,220 zone. So that's why it could become a very interesting level to watch, because it previously also acted as a good area of support here back on the 26th and 25th of April, and also as a good area of resistance. It acted on the 15th of April. So basically, long story short, guys, 5,750 level is on the upside. That's the gateway for us in order to kind of aim for higher levels. In terms of the downside, well, we'll take a more cautious approach. 5,370 level, that's what we're going to be keeping a close eye on. So jumping into a few pairs now, very quickly. Aussie dollar, I talked about this one yesterday in my traders tea time. So what I was telling you guys, to keep a close eye on this little range here that we had between the 0.7030 and the 0.7060 level. So you can see that we had a nice sell-off here. We broke this lower side of the little range. It almost managed to reach the psychological 0.70 level, but kind of failed to do that. So currently it's still trading below the 0.7030, so, and also below its pivot. So all this creates kind of a more of a bearish sign here, and to be honest, it increases the chances of a possible test of the psychological 0.70 level. So for now, guys, that's going to be the game plan. If it remains below the 0.7030, probably this could be quickly picked up by the bears, and we could see a further decline lower. So that's why we're going to be more bearish than bullish on this one. If this travels back inside this little range, this is going to be our little neutral territory, because for us to get comfortable with higher levels, we need to see a nice good push above the 0.7060 level first, and then we'll target higher areas. Jumping into Euro USD now, sold off as well. So basically it traveled a little bit higher here, managed to hit the 1.1260 level, and then kind of quickly sold off here. Managed to test this upside support line, still kind of trading above it. So yesterday I was telling you guys to, even though if we see a drop back down here below this, let's say 1.1228 zone approximately here, this is going to be our little neutral territory, to be honest. This is where we're going to stay put and just continue observing it, because it's going to be a very close call here. It might actually rebound from this tentative upside support line and push back up again, or I mean, or at the same time it could also break it lower. So that's why for us to target lower areas, we need to see a nice good break below the 1.1175 zone, and only then we'll target areas like the 1.1120 again, which acted as a very good area of support here, or in other words, it was near the lows of April. So keep your eyes on this one, and keep your eyes on the 11.75 zone, so 1.1175. In terms of the upside, if we see another push back above the 1.1228, this is great for the bulls. We could see this one maybe traveling back up here towards the 200 EMA, or even actually traveling all the way back towards the 1.1260 zone. So keep your eyes on this one, and keep your eyes on this little tentative downside resistance lines as well. So yep, let's see how this is going to play out. GBPNZD, very quickly on this one. Also talked about this one in my traders tea time yesterday, and basically what I was saying, guys, that we might see a push higher. At that time it was around the R2 here, and it pushed higher. It managed to reach that, but then kind of you can see that it sold off. So looking at this picture, I mean, looking at this 4-hour chart, I can see that, of course, that the pair is slightly overbought here from the very short-term perspective. So in a way, a bit of a slide lower could be healthy for this pair if it wishes to travel higher again. So and yesterday, what I was saying, guys, we might see something like this happening. So it might travel a little bit lower here, maybe below the 1.9655 zone, or even actually testing the 1.9620. And that's the level that we're keeping a close eye on here, because this is the high of the 24th of April. So very good potential target here for a support level. You can see that previously on the 1st of May it acted as a good bouncing ground here as an intraday swing low, from which it kind of traveled higher then and hit these highs. But that's in the scenario if we see a retracement here. And to be honest, like I said, given that it's quite overbought here on the 4-hour chart, we may see a bit of a correction here to the downside. But for those who are more on the cautious side, wait for a clearance of these yesterday's highs around the 1.9710. A nice good pop above it would confirm a forthcoming higher high, and we could then target higher areas again. So if this of course drops below the 1.9620 zone, this is going to be our little neutral territory, because for us to aim for lower areas, we would like to see a drop below this area here near the 1.9540 zone. So this way, we could then get slightly more comfortable with lower areas, at least up until we hit this upside support line taken from the lowest point of February this year. So that's the game plan for GBPNZD. A very interesting pair. Let's see how it's going to play out. Today we do have the BOE, so don't forget that. Please check your economic calendars. Yep, we could see maybe a bit of more volatility than usual. So yep, keep your eyes on that one. And the last pair, very quickly, I wanted to touch on, and that's USDJPY. So obviously, if we had AUDUSD, EURUSD selling off, USDJPY had a nice push back up again. So this is a bit of a messed up pair, to be honest. I mean, it's becoming really difficult to kind of do technical analysis on this one. So that's why for now we're just gonna, of course, take it as it is. Certainly yesterday what I was talking about, but basically what I was aiming for, a nice good break here below the 111.25. We did have that, but as you can see, the pair reversed quickly back up and traveled higher. Now, looking at this picture, I mean, given the fact that yes, it traveled back above the 111.50 zone, that of course increases the pair's chances to push higher again. But be very careful with this one, be very cautious. We do have, well, the Japan is closed this week, as you know, and to be honest, there could be some demand for the yen as well picking up, but again, this is just speculation for now. Of course, looking at this current picture, it did manage to break above the 111.50. If we take it as it is now, if we take the fact that it's now back above the 200 EMA, the next target here could be around the 111.90. But again, guys, be very careful with this pair, and in general, be very careful with the yen pairs for now. So for now, like I said, this is where it is. This is how it is. Of course, it is looking more positive than negative because it's above its pivot, because it's above its 200 EMA. But then again, it is finding strong support here near the kind of congestion here of the 50 and the 100 EMA. So if we do see a nice good push above these two, the 50 and the 100 EMAs, then yep, we could consider a further push higher towards the 111.90. Okay, guys. I hope you found it useful. Thank you very much for watching and listening. And if you want to join me later on, I'm Traders Tea Time, and that's, as always, 13:15 GMT time. But for now, I hope you have a wonderful trading day. Be very careful today, guys, and I'll see you later. Bye-bye.